As we enter 2024, there's a lot of noise about the possible housing market crash, not just in the US, but worldwide. In today's interconnected world, if the US economy takes a hit, it can quickly affect the whole world, much like a pandemic. In today's video, we'll talk about the current situation in the US housing market, what's happening now. I will review 3 warning signs of a potential real estate market crash and provide actionable steps you can take right now to prepare yourself in this ever-evolving landscape. And if you're curious about how housing prices in your area compare to other places around the world, or if you're interested in investing somewhere else, stick around till the end. As a bonus, I will show you a housing market bubble map featuring 25 major cities, including New York, San Francisco, Vancouver, Frankfurt, Munich, Zurich, Hong Kong, Singapore, and Sydney. So it's going to be a wild ride. Whether you live in the US or somewhere else and you are worried about the housing market in 2024, this video is for you. Looking back at 2023, it was a discouraging year for aspiring homeowners, especially in the US. Mortgage rates hit all-time highs and housing prices in most cities also hit all-time highs. According to the latest figures in November 2023, the number of homes sold dropped by an average of 6.2% year-on-year. The national average for a 30-year fixed-rate mortgage is at 7.4%, up by 0.6 points from the previous year. However, US home prices instead increased by 3.6% compared to the previous year, with a median price of $408,000. So we've got higher mortgage rates, lower demand for homes, but higher housing prices. It's a bit strange, right? Could it be a sign that the housing bubble might burst in 2024? Now let's take a look at 2024. It might just be a better time to consider buying a home for at least some people. Although home prices are likely to stay high, there's a chance of interest rates going down, which could be a win for potential home buyers. The 30-year fixed mortgage rate has already seen a bit of a dip, dropping to 6.06% from the high of over 7% in November last year. But even with this slight improvement, the mix of high mortgage rates, pricey homes, and the shortage of available houses still make it tough for a lot of people to own a home. And you know who's really feeling the squeeze? They're the first-time buyers. They're more downbeat than ever about being able to purchase a home as we roll into 2024. 2024 holds the promise of lower interest rates, but it also brings its own set of challenges. Now let's explore the critical indicators that suggest a need for caution in this housing market as we move forward. Now let's talk about the 3 warning signs. The first warning sign is affordability worries. Like I mentioned earlier, affordability is a big headache in the housing market right now. Many people have to take out a significant chunk of paycheck just to cover the monthly home payments. That's not good news because it might mean fewer people can actually afford to buy homes. Over the past 3 to 5 years, the US Housing Affordability Index has taken a nosedive, dropping from a high of 187 in 2021 to 92 now. That's a huge drop. If this affordability squeeze sticks around, it could mean less demand for homes in the long run, which you guessed it, could push housing prices down. The second warning sign is rising employment rates. Let's talk about jobs. Right now, the US unemployment rate is sitting at 3.7% as of December last year, compared to 3.5% a year earlier. Now, on the surface, that might not sound too bad, especially since it's lower than the long-term average of 5.7%. But here's the thing. If the economy slows down, those unemployment rates could start going up again. And historically, when unemployment rates rise, it's often a sign of an economic recession. Even though the current rate is relatively low, we've got to keep an eye on those historical trends. The third warning sign is the R word. Recession has been making headlines lately. According to the New York Fed Recession Possibility Indicator, there's still a hefty 62% chance of a US recession in the next 12 months. And guess what? Other trusty indicators are also flashing warning signals that the economy might take a hit. Job data is looking a bit uneven. and the yield curve is still inverted. Economics are sounding the alarm about the potential recession in 2024, and that could spell trouble for the housing market. We're talking weakened demand for homes and some homeowners feeling the squeeze, maybe even deciding to sell their home. Personally, I don't foresee a severe housing crash in 2024. However, as potential home buyers, it's crucial that we remain well informed and be cautious in this dynamic housing market. The affordability concerns, rising employment rates, and the looming possibility of a recession are warning signs we just need to be aware of. And how should you prepare yourself as a potential home buyer? It's impossible to predict exactly when a housing crash might occur, as the housing market is influenced by a wide range of factors. But if you're considering buying a home, it's probably a good idea to make sure you are financially prepared for the possibility of an economic downturn. This could include having a solid emergency fund, a secure income, and a mortgage that you can comfortably afford even if interest rates rise, especially the inflation story might be coming back again. And hey, I didn't forget about the real estate bubble map across major cities worldwide. UBS latest global real estate bubble index got some interesting insights for you. Over the past year, most big cities globally have actually seen a dip in real estate prices. Places like Toronto, Frankfurt, Munich, Hong Kong, Vancouver, Amsterdam, which were on the bubble risk radar a year ago, have seen property prices dropping by about 10%. But hold on, there are two cities that still have bubble risks according to UBS: Zurich in Switzerland, where I am now, and Tokyo in Japan. In Zurich, it's because most high-income earners are moving in and super low interest rates are keeping prices up. Believe it or not, despite some interest rate hikes, the mortgage rates in Zurich stay below 3%. Now in Tokyo, it's a similar story. Attractive financing conditions and a growing population, especially immigration, are helping to keep the house price up. If you want to take a deeper dive into the details or check out what's happening in your own hometown, I've dropped the link in the description area for you to explore. Finally, for those investors who want to invest in 2024, while real estate can be a sweet investment with rental cash and price hikes on the horizon, it's not a smart move to put all your eggs in one basket. If you're curious about what are the top 4 profitable investments in 2024 that you can invest, I have you covered. Subscribe, like, and click on the screen. I will see you in the next video.